is trying to retire. Meet Dave, who is a baby boomer and long-term CRE owner and developer who's trying to retire. He really wanted to say goodbye to the stress and burden of owning an apartment complex so he wouldn't have to spend so much time away from his family and enjoying his hobbies. The thing is, if Dave sells his complex, he'd pay $1.1 million in capital gains tax, and he needs a predictable passive income stream in retirement, and doesn't want to just do another 1031 exchange, which puts him in another property. Dave asked his friend John if there's an alternative to 1031 exchange, and if he knew someone he could talk to about calculating the potential tax consequences before he puts his property up for sale. John tells him he has a more attractive solution than selling the property and paying the $1.1 million tax, and that it could save him a lot of money. John tells him he worked with Brett Swarts at Capital Gains Tax Solutions, and that's when he learned a secret all about eliminating the need for a 1031 exchange using a proprietary structure known as a Deferred Sales Trust, or DST. Once he understood the DST, it was now crystal clear to John how to sell his property and make money from the tax he would have paid, because he saw how the Deferred Sales Trust could help him defer the tax, have liquidity, diversification, and a way out of a 1031 exchange. He explained to Dave how this helped him achieve his financial goals and allowed him to never have to face overpaying for a property in a 1031 exchange ever again. John also learned that traditional 1031 exchanges aren't enough anymore to defer tax, reduce risk, and make money in CRE, and that he needed to create an optimal timing wealth plan, which solves capital gains tax from multiple angles instead. John gave Dave contact information for Brett Swarts, the founder of Capital Gains Tax Solutions. As a result, Dave connected with Brett, clarified his optimal timing wealth plan, sold his apartment complex, and the net proceeds were moved into the Deferred Sales Trust. After closing his DST, Dave was not only able to spend more time with his family and enjoying his hobbies, he has also been able to create more wealth by investing passively back into real estate at any time, all tax deferred, because he's no longer trapped by the 1031 restrictive guidelines. After he did that, he started spending more time with his family and enjoying his hobbies. Deferring capital gains tax on the sale of your primary home, business, investment, real estate, or other highly appreciated asset used to be complicated. Not anymore. Schedule a no-cost consultation now to learn why Deferred Sales Trust has been used thousands of times for over 24 years and how you can benefit. Talk to an expert now. Call Brett at Capital Gains Tax Solutions to clarify if the Deferred Sales Trust is right for you at 916-886-2986, or go to www.capitalgainstaxsolutions.com to learn more. Where are the funds invested if you use the Deferred Sales Trust? Investing shouldn't be complicated. That's why we've partnered with financial advisors who offer an investing platform powered by TD Ameritrade and built around you. Create a portfolio that fits your goals and aligns with what you care about, because how you invest is as important as why you invest. Decide your initial level of distribution and what level of risk you're comfortable with. Then, our strategic partner's experienced investment team will design a diversified portfolio built around what matters to you. See all the funds that make up your investment plan. Monitor your progress 24/7 online to see how you're performing and easily make adjustments to help keep you on track to meet your goals. Get started in just a few minutes and benefit from the investment expertise of seasoned financial advisors for your Deferred Sales Trust investing. Life's too short to feel trapped by assets you're ready to sell, don't you think? Get started with a wealth plan today. Book a call today by going to capitalgainstaxsolutions.com or call Brett at 916-886-2986 to clarify if the Deferred Sales Trust is right for you.
All right, we are live. In fact, we are not live, but we will be live if you're listening to this after this. Jeffrey Broger, Jake Miller in the house today, and I want to welcome you to the episode of a mastermind slash capital gains tax solutions podcast. Remember, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to defer highly appreciated asset sales and capital gains tax on cryptocurrency, primary homes, investment real estate, so you can create and preserve more wealth or help your clients do the same. So we are in our probably 6th week now, and we're focusing on cryptocurrency and connecting the Deferred Sales Trust to the world of real estate and the securities world, being able to sell high and diversify, and being able to defer tax. So I'm excited to have my co-host with me, Jake Miller. Jake, how you doing?
Doing well. How are you?
I'm doing great, and it's been a few weeks. We took a little time off for the holiday of celebrating America's birthday, which was really cool. And hopefully you had some restful time. How was your break?
It was fantastic, and of course, as we're celebrating our independence, a lot of times it's also good to celebrate our independence from financial burdens and things of that nature, such as heaven forbid we talk about freeing ourselves of tax. I don't want to do it in a rebellious way like we did so many years ago, but in the same mindset, we need to consider going forward what is most efficient for our money. Just because we make a lot doesn't mean we get to keep a lot. So there's strategies that we can utilize to help make that happen. And that's why we're talking about the Deferred Sales Trust.
You got it. Yeah. And I actually watched a little special. Ben Shapiro did like a special on like basically the pre 10 years before the revolution, right? And before the Constitution was signed and all of those things. And it was interesting, right? How much of all of the war and all of the conflict was centered around taxation and representation, right? And the ability to do commerce and do life and do things in a way that has more freedom, right? And not as much restrictions. And so, in fact, it was interesting. At one point, the founding fathers, I don't know if you remember this, Jake, but they actually went back to England and said, look, if you just give us these few things, like we'll comply for the rest of the stuff. And it's like they gave them one last chance to say yes to a few counter requests, and England still said no, right? And it was like, all right, well, this is what it is, and this is the fight, and so here we are now, so many years later. And so, also want to welcome Jeffrey Broger to the Mastermind. Jeffrey, how you doing?
Thanks, guys. Doing well.
Hey, you're looking good, brother, man. It looks like you got your pro mic today. I think the other times you were just driving the hat backwards down the street, and now you're officially in the studio, back to work, huh?
Yeah, Tesla was on autopilot. I was on the road, and back in the studio, podcasting, zooming, and got the pro mic.
Absolutely. And for those who are listening in on here, would you give a little reminder of what your focus is and where you're located? That's for you, Jeffrey.
That's for me. Okay.
Yeah.
I am in Huntington Beach, California. I am an EXP commercial agent and really got into real estate from an investor standpoint, and then did marketing for 4 years prior to ever doing sales. So I'm a marketing agent, really good at lead generation, finding off-market deals. And, that's what I'm up to today. I have a podcast as well called Lockbox. Most people listen to 7 podcasts if they're podcast listeners, so keep listening to this one. But if you're interested in some, action items for success as a real estate professional and learning from the top guys, then check out my podcast, Lockbox. I had Brett on there too.
Exactly. And I think Jeff came on my show. If you haven't yet, I think you did, Jeff, right? We'll get you on. And then, and likewise, plug for EXP Commercial. I'm also EXP Commercial as well. If you're not EXP and you're listening to this, talk to Jeff or me. Katia, welcome. You're welcome to introduce yourself too. I think she's a repeat masterminder here with the DST and cryptocurrency and all things. Katia, how are you?
Good morning. Can you hear me?
I can, yes. And I believe you're also EXP as well.
Correct. Yeah, I'm brand new. I really just still a learning process. And I'm just looking exactly for new avenue to represent my clients. And the trust is so important.
Yes.
We need to not just earn money, but we need to teach people how to keep them and how to make them work. It's
Yeah,
so
absolutely.
important.
And we'll talk about how it's a win-win for the IRS today as well. For folks who might be wondering, it's kind of a common thing that comes up. And we have Yanni in the house. Yanni, you're on mute. We can't see you. We'd love for you to come in, but that's all. You can also just hang and just watch too. I think you're our first time guest. Well, welcome. But you're welcome to introduce yourself and a little bit about your focus. But if not, we'll get started here today. So looks like Yanni is not there, which is fine. We'll wait. We'll just get started. So. All right, we always like to start out with the vision for what we're doing here, right? And then also tie in a deal story that's closed, and then give the update on the cryptocurrency which we're solving for. Okay, so let's start. First of all, a reminder of the vision for why we're here. So the goal is to connect the cryptocurrency world with the real estate world, with the financial advising world. Oftentimes we found with our clients who are in one or the other that they are not necessarily either as knowledgeable or they don't have as much of an appetite for one or the other. So like, for example, a lot of cryptocurrency folks, they don't necessarily like or want to be invested as much in the stock market. Likewise, those who are in real estate, not as much like to be in cryptocurrency, and maybe not as much in the stock market. And then those in the stock market may not like the real estate or the cryptocurrency world. So it's kind of three general groups. Okay. Now, of course, people diversify, they do multiple things, but generally speaking, we want to try to unlock the value of each of these diversified investment opportunities, right, in a way that fits your needs or your client's needs, right? So, and we believe the Deferred Sales Trust is the way to do that because it's no longer about cash flow, it's about tax flow, right? We believe it's all-time highs in real estate values, all-time highs in stock market, all-time highs in cryptocurrency, although it's kind of taken a hit here as well over the last 30 days. And so it's an interesting time, but if you can't sell high in deferred tax, guess what? 30 to 50% can be wiped out of your gain. And so having the ability to bridge those gaps and have a like we call a safe harbor to diversify and capture gain, we believe the Deferred Sales Trust is that safe harbor for you. And so with that being said, Jake, any thoughts on that initial vision or anything you want to add to that?
Absolutely. Whatever the flavor of investment is that you have, if it's real estate, if it's crypto, if it's marketable securities, if it's your own business, industrial, warehouse, pharmaceutical, medical, whatever it is, there's a potential for capital gains. There's a potential for taxation. There's a potential for you to lose some of that asset just because it's your time to pay back your share to the government, so to speak. And we're not trying to get anybody not to participate at the level that they're supposed to. But what we try to do is help people understand at what level they're allowed to participate. There's options out there. Sometimes they don't see it that way. Sometimes their consultants or other people are just very transactional, or they just don't know what else there is. And that's why we're here. Because ideally, through proper documentation, proper paperwork, proper process, a lot of these things, regardless of your business and your investment, to a large extent, it could be more efficient through the process of selling it. And as we discuss all the time with the DST, receiving those funds in this trust that is arm's length from you, you don't take contractual receipt, and it can continue to grow and invest with dollars that you haven't cut them in half. You haven't taken the money, so to speak, and ripped it to give away part. You still get to use the whole thing to work with. You still have all the value of your asset to continue to grow and build. And it's just super exciting. But when we talk about this with people, the light just turns on. And it's interesting. They could be a doctor, a dentist, a real estate investor. They can be a cryptomaniac. All of this stuff, it works for everybody because it's a process. And it's a process that has been proven, is a process that has been vetted. It is a process that is always scrutinized, and it currently has a 100% track record. So love it.
Beautiful, Jake. And by the way, for those who are wondering, Jake is a financial advisor. He is securities licensed, and he has quickly become a Deferred Sales Trust expert over the last year that I got the pleasure to work with him and know him. And so that being said, let's move on to the second phase of the Mastermind, which is the deal close story of the week. And this deal is actually closing today. And this particular deal is for a couple who lives in the Silicon Valley, and they are selling a rental property in Cupertino. In fact, she works with a group called Compass, right, which is a very respected real estate agency. And she's been in the business for a very long time. I first contacted her about a year ago on one of her listings that had a huge capital gains tax. And like most real estate professionals, especially in the luxury area, especially in the Silicon Valley, they get approached with a lot of stuff. A lot of people wanting to sell them things. And let's just say they dismiss most of it, and they're very skeptical, and they're very busy closing deals. And so I educated her on it. Let's just say she was, I would say, probably not that excited. She said, send me some information about it. And I did, and I followed up over about a year. And before you know it, guess what? She reached out to me and says, Brett, I'm actually selling my own place, my own rental property. And we're selling it. We think we're going to get around like 2.2 million. We have basically zero basis, very large capital gains tax. And as a reminder, how we calculate that in California, you have about 13.3%. Federal is about 20%. And you add about a 3.8% Medicare tax. And then you have depreciation recapture. So we have to use around, if it's a rental property, somewhere around 40%. So we take the 2.2 million, right? And we take that by 40%, and it was about $880,000. So I asked her, well, why don't you do a 1031 exchange, right? Brett, the reason I'm selling is we're getting older and we don't want a 1031 exchange. Second, I'm in real estate, you're in real estate. Prices are through the roof. It makes zero sense to sell this asset and just overpay for something. I said, hey, I agree with you, right? And I said, okay, we'll take it to market, see what you can get on the price. We'll get everything set up prior to. She's excited about it, still had a lot of questions, but we kept answering them and working with her. So she calls me like 2 weeks later, and she's like, Brett, you won't believe it. These people, they want to pay $2.75 million for it. She goes, I thought it was worth 2.2 maybe if we were lucky, but we were able to drive up so much. It's 2.75. She goes, Brett, you don't realize how much we thought, A, we were going to pay in tax, and B, we felt trapped before, and now you're not only saving, you're saving now 40%, which is $1.1 million of capital gains tax liability, right? She's like, and her mind is just like kind of blown, and she's just, kept asking questions, and it's emotional too. She's owned this property for a long time. She's been in the marketplace, right? But we kept working with her, speaking with her husband, and speaking with escrow. We have a go-to escrow agent that we use out of Cupertino as well, and they're all of California, and we're closing today, right? I think it's going to fund here in the next 2 hours, and so that's amazing. It's transformational for her and her husband. They get the income stream, and they get to be passive. They don't have to deal with the California rent laws. They don't have to worry about rent control. They don't have to worry about eviction control, and they can be passive, and they can just kind of retire. So that is the update on the deal close story. Jeffrey, you're in real estate. Does anything ring a bell there with what I just said?
Everything. I mean, that's game changing to not have to 1031. That is the big reason why a lot of investors sit on the fence at times like these. It's like, I have a list of them that are saying, I'm just waiting for the right property, and then I'm going to sell this one. And they're all hanging on the fence. They want to capitalize on the seller's market, but they're waiting for that perfect 1031. And, I'm an investor, and not having to take that hit or accepting the depreciation as income in that tax year when you sell it, like, there are so many benefits to this. It's crazy. And I mean, that's why I'm sitting here. I already understand the value of it from my relationship with Brett over the last couple of months, but I just want to sit here, absorb these case studies and these examples so that when I'm having conversations, I can have these at top of mind, because I'm a huge believer in this as a massive solution for not only investors, but also just, everyday people that are selling assets, or that maybe hit it huge in crypto and they have no idea what to do with it. I mean, there's so many possibilities. It's a really cool financial tool. And I mean, you asked if it rings a bell as far as anything in real estate. It rings tons of bells. I mean, this is this is like a magic trick. That's why I keep equating it to. It's like a magic trick. It's like before this was not possible, and now it is. So I love it.
Thanks, Jeffrey. I appreciate that. And Katia, I'll also give you a chance because you're also in real estate. Any other additional thoughts to what Jeffrey just said?
No, but you really have to find the opportunity for your client. Exactly. You keep sitting until you say, hey, this is what I have. And that's where you do your own work. Everybody's an investor. We just need to really understand what that means.
Excellent. Thanks so much. And then Yanni, again, we see you there, and you're welcome to join or just keep listening, which is cool too. All right. So now let's move into the cryptocurrency part of things. Okay. So we are in the process now. I want to give you guys the update. There's now 60 plus emails between tax attorney, myself, actual Ethereum owners, right, who are my clients, and they wanted, first it started with, like, what is it? It's a trust. Okay. Then they started with, who am I? And giving my photo and holding up the ID card and then they want the trust documents, and then they just kept asking for more. And then they wanted the client, I won't give his name, but they want his information. And then they wanted his wife's information. And then anyway, so we've been going back and forth for now. It's been like 3.5 weeks, and it's kind of exhausting. But again, at the same time, they've never seen this before. So you can't blame them because they're not used to it. So they want to make sure that they're not doing anything that's going to cause any red flags on their side. So I believe next week we will finally have approval of the account being opened up at Kraken, however you pronounce one of those two. We're also working on Binance and Coinbase. Same thing. They've been really delayed with us. I think they're also kind of busy. I mean, I don't know, but at the same time, we're just continue to solve these challenges, and we're perfecting how to open these accounts. Timing is everything. And so if you're listening to this, we want to make sure we set up in advance, right? And because you can tell, this client has been wanting to close for a while. And by the way, Ethereum's taken a huge hit. So this is a great case study in the sense of almost what not to do, right? If you're even considering using this for highly appreciated cryptocurrency, not only do we need to set up the trust, but we need to get the trust set up at the exchange account. And that can take some time. Right now, hopefully we perfect this first one, and that gets done, and then at that point we can streamline this. But we want to let you know we work at a no cost, no obligation basis, right? So all of this work we've done, hours and hours and hours, all the expertise, the trust being formed, nothing's been charged to the client yet. We only charge if and when it closes, when we perform. Now, if you're wondering, well, have you done this with other things like that are similar? Yes. So public stock, private stock, and it's been a very similar process with them when we first started out with doing this on different groups, and so we're not unused to this. It's just, again, we're breaking through a new place here. But so that's the latest. I wish I had it actually officially closed. Hasn't officially closed, but it's good to document the journey here, and then to encourage you to not wait, because literally you sign up, you get everything going. Your crypto goes to zero. Hey, you don't owe us anything, right? But you sign up, you wait, you don't wait, you sell it, we can defer your tax, but we got to go through the process. What are the minimums? Again, the minimums are $1 million net proceeds and $1 million gain. So this is not for smaller accounts, and that's on a single coin sale, right? So if you're selling 100 coins that all end up $1 million, it's not us, right? So it's got to be basically one single asset selling for $1 million or more and has a $1 million gain. Now, if you say, Brett, I got 2 coins. I got Bitcoin and Ethereum. Can I combine the two? And they're both at 500,000. Yes, that's fine. Okay, but no more than 2. Why? Well, because we have fees and there's transactional cost, and our fees eat up the savings. So we found that we want it to be a win-win-win home run for you as the client as well as us. And we don't want the fees eating up the savings. So we found those are really the solid numbers to make the ROI make sense. So Jake, any questions or thoughts on that?
It's an exciting process. And I think as far as comments go, we're staying on top of all the changes, everything that the IRS is coming out and saying, hey, by the way, we're going to implement this new software. We're going to track these things here. We're going to whatever, right? There's a lot of unknowns, and we're battling on through this with people to help them find the solution. And we're finding the tax solution, and we're going to also help out with a lot of the other stuff that goes along with that. It's very exciting. So we're collaborating with a lot of our clients to help share and disseminate information that is useful and beneficial for everyone. And through the whole process, we're learning a ton.
Excellent. Very good. So now let's shift to, I promised in the beginning, we talked about why the IRS is winning, right? So the most common, frequently asked question besides like, I never heard of it, too good to be true. Why doesn't my CPA know about it? It would be like, well, am I doing something illegal? Or like, why would the IRS like allow this? Or like, are we doing something that's going to upset them, right? And it's actually just the opposite. In fact, the IRS does this with in the tax code with a lot of things, such as like the 401k, right? Such as an IRA, such as a 1031 exchange. They allow certain things which incentivize the movement of capital into businesses and real estate, stock market, which spurs economic growth, which spurs more job growth, which spurs more tax revenue, right? So they want to do things and give you opportunities to for things, legal loopholes to do things that incentivize more tax revenue. So let's compare that to the 1031 exchange, because people go, well, they're taking away the 1031. Why are they taking away the 1031? Well, we don't think the 1031, we believe that it's a great thing and it's great for the economy, and it's actually, they shouldn't take that away. But if you compare it to why the IRS might not like the 1031, here's why. In their mind, the 1031 exchange is like a swap until you drop, right? Most people will never pay the tax because they just continue to 1031, and Katia's connecting with this, right? And then they drop, meaning they die, and they get a stepped up basis, right? So if you can imagine, the government goes like, okay, Jeffrey bought a property for $250,000 20 years ago, and he's 1031 into like 6 or 7 deals over the years. Now he has a $5 million property or asset value and a huge gain. Well, if he were to die, the next day his kids could step into his shoes and get a stepped up basis at that $5 million, and then they could sell and walk away capital gains tax free. So the government's like, wait, what the heck? Like, that's not great for us. Like, now the flip side of that, of course, is their cash flow, and he's improving properties, and that's hopefully why they keep it, and the government still wins. But they really feel like some of them do. I won't say all of them. Some of them feel like it's a tax avoidance, right, versus just tax deferral, and they're not winning like they feel like perhaps they should or are entitled to. I don't know, however they really feel that. Now, that being said, that's why they're talking about taking it away. The other side of that too is Jeffrey might be overpaying for properties, taking on too much debt, going to multiple deals, right? Rushing around buying deals that he knows he shouldn't be paying for, or he wouldn't be paying for if it wasn't for the tax. However, the music stops in 2008, and guess what happens? Jeffrey loses it all, or loses half. And if Jeffrey loses it all, what happens? Well, he has no tax to pay, right? So think of it from the government standpoint, they're kind of caught in between this rock and a hard place of, does it make sense? So now let's talk about the Deferred Sales Trust and why we believe it's a win-win-win for us, for the client, and also for the IRS. Because what they're doing is they're locking in the game. You see, the 1031 exchange is the continuity strategy, whereas the Deferred Sales Trust is an exit strategy. Meaning what you're saying is, look, I sold it for $5 million, and I owe that $2 million of tax, and I'm reporting that I owe that $2 million of tax, and I'm going to start paying on the income that's coming off of it right away. And if I dip into the principal, I'm going to pay that capital gains tax. But what the government says, okay, that's great. You also don't get the stepped up basis, because by nature, you're not owning the trust. You are lending to the trust, right? And therefore, you're in a different tax code. And therefore, there's no stepped up basis even applies. Now, can you give it to your kids, and your kids can continue the deferral? Yes, you can continue the deferral. That's fine. But what you're saying is you're locking in the gain, and if you dip into principal, you will pay the tax. The second part about it is, by nature, the Deferred Sales Trusts are diversified. So instead of Jeffrey, buying a single asset or a couple properties that all kind of crashed during a potential downturn, by nature, we diversify the equity into stocks, bonds, mutual funds, passive or active real estate, hard money lending, a new business venture, multiple things, which does what? It also diversifies the taxes that are going to be paid on those to the IRS, right? So they've increased their likelihood of receiving because of the nature of the diversification. So that's why we believe the IRS, it's a win-win-win. And also why we believe they wouldn't want to take it away, because the flip side of that is people just don't even sell, right? They have cryptocurrency that's worth 12 million bucks, and they're like, I don't want to sell and pay 5 million of tax, right? In this scenario, they could sell, defer the 5 million, put it into the marketplace, get more tax revenue, put it into tangible assets, put it into job creating, vehicles, right? So does that make sense, Jake? Any questions or thoughts on that?
No, I mean, essentially, it's a financial tool that allows us an opportunity to continue to use the whole value of our asset and move it forward into other assets through the trust. It's just wonderful how it works.
Yep. Jeffrey, anything to add to that? Or questions or thoughts? You can also have a question too.
I would love for you to basically say all that again slower, but you don't have to. I mean, this is recorded. You're an expert, so the description was so streamlined and fast. As like a beginner in this, it was hard for me to really follow it from end to end. But my understanding is that real estate trusts have been around for a long time. A lot of real estate investors are familiar with putting a property into a trust for their children and things like that. And so, I equate it to a similar tool that can be used for any type of investment that's highly appreciated. So that's my like baseline kindergarten explanation and understanding.
Yeah,
And
rewind it and play it again, and then you can also go to my YouTube channel, capitalgainstaxsolutions.com, and we have a little short videos and snippets and stuff like that to get more education on it. But yeah, no, that's really good. And we also have national law firms that year to year review this and are connected in Washington with different groups to kind of see what's on the radar and what could be happening, and so we're always monitoring the potential changes, and we believe. We know right now nothing's on the table to take away IRC 453. It's an installment sale, so you can rest assured there. Also, lifetime audit defense built in. So the tax attorneys who created this, no additional charge. They'll provide audit defense, which also I like to say the sleep well at night type of insurance if and when you might be audited, but also has a very low audit risk, a rate, right? So there's not a huge. It's not like a red flag. The IRS knows what we're doing. They've seen it. They've looked at it. They've gone through it all, and these are all no change audits. So, all right, so that's the legal part. That's why the IRS, we believe, is winning. We talked about the deal story. Now I'm going to open up for questions from anybody at all that might have questions. So we'll start with Katia. Katia, any questions at this point that we can answer for you? You're on mute, so go ahead and unmute yourself.
No, but I really want to say thank you. You nailed it on the crypto. It's wonderful. If we can teach more people how to understand to diversify their portfolio and understand what a trust can do for you, it's wonderful. This is why we have to build wealth when we accumulate wealth. It's work, but it has to be understood. So if we can put all this together, wow, so much is opening. Thank you for really understanding.
You're welcome, Katia. Yes, and thanks for coming back and
opportunity.
sharing that. And invite more people, invite more clients. Everyone is welcome to this call. We're happening every Friday, 10 a.m. PST. It's more of a Zoom meeting. Jeffrey, any last questions or thoughts before we wrap this thing up?
No, sir. Nailed it.
Awesome. Jake Miller, any last questions or thoughts before we wrap this thing up?
I think one of the most valuable things that comes out of this is the real life cases that we can share information about what other people are doing. Life doesn't ever get real until it's real. And that means that there's something going on, there's something happening, it's personal to you, right? So bring somebody somebody who's going through it and they're going to pay a ton of taxes because they just don't know. Have them ask some questions. Let's talk about it here in front of everybody. Just be clear and transparent. We love it.
Beautiful. And by the way, you can go to capitalgainstaxsolutions.com to learn more. Search that on YouTube. You can send me an email, brett@capitalgainstaxsolutions.com, and we can add anyone to the invite. And we appreciate everyone attending today, as well as listening in if you're listening on the podcast or the YouTube channel. And I want to encourage you to never feel trapped by capital gains tax ever again. Get educated, get empowered with the Deferred Sales Trust. And thank you so much for listening and being part of the show, everybody. All right, take care.